Hello everyone, welcome to V-Shark Trading, the place where we share daily market analysis and trading setups based on the smart money concept. In today's video, I will walk you through a detailed analysis of a sell trade on Australian dollar to US dollar executed on September 25th, 2025. This trade was already introduced briefly in a short video on the same day. If you haven't watched it yet, you can check that short clip to see the quick setup idea. By combining shorts and long-form videos, we not only get a fast overview but also gain a deeper understanding of the reasoning behind each trading decision. The Australian dollar to US dollar pair had experienced a very strong bullish move beforehand, showing significant buying pressure from the market. However, everything changed dramatically once the United States announced its latest interest rate decision. The US dollar immediately strengthened, causing Australian dollar to US dollar to reverse sharply. On the H4 timeframe, the market structure turned clearly bearish. Consecutive long red candles appeared, confirming that selling pressure was dominating. In this context, looking for buy opportunities would be risky, while aligning with the larger downtrend by focusing on sell setups is much safer and more reasonable. To refine the entry, we move down to the M15 timeframe. Here, the downtrend is also very clear, consistent with the H4 chart. But if you look closely at the end of the M15 move, there appeared a small order block, OB. Although this OB was not extremely clear, it still revealed a sign of large players entering the market. The crucial point is that after this OB formed, price could not continue higher. Instead, it reversed downward and even broke through the OB structure completely. This was a very strong signal that the M15 structure had realigned with the H4 structure, both pointing to the same bearish direction. When multiple time frames are in agreement, the reliability of the trade increases significantly. With such confirmations in place, selling was the obvious choice. However, instead of chasing the market while price was already falling, the smarter approach was to patiently wait for a pullback. The most logical area to look for an entry was the previous OB high that had been broken. This level acted as a newly formed resistance where smart money was likely to step in again. The strategy was simple: place a sell limit around that level, put the stop loss just above the OB for safety, and target the next support area on the H4 chart for take profit. By doing this, we were trading in the direction of the major trend, while keeping a favorable risk-to-reward ratio. In practice, the market played out exactly as expected. After breaking the OB, price retraced to retest the old OB high, triggered our sell limit order, and then continued to drop strongly. This trade was a textbook example of how to trade with smart money footprints. No guessing, just patiently waiting for the market to return to a confirmed zone. From this example, we can draw two key lessons. First, always prioritize the higher timeframe trend. The alignment of H4 and M15 gave this trade a very solid foundation. Second, remember to wait for price to pull back. Entering too early or chasing the move reduces the quality of the setup and the potential risk to reward. And of course, no matter how strong the setup looks, risk management and discipline are essential. Always calculate position size carefully, respect your stop loss, and never over-leverage. A clear setup only becomes profitable in the long run if combined with strict money management. Thank you for watching, and I'll see you again in the next video of V-Shark Trading.